What is going on, everybody? In another day in this lovely market. This is something that I've been talking about. I've been given a lot of insight into what was going on this week. Something I mentioned last night, not only that we were getting the FOMC meeting notes, but the fact that every time we've essentially made all time highs, we've sold off. This is something that's been reoccurring over the past, I would probably say, a couple months. We've had these all-time high breaks and then sell-offs, all-time high breaks, and just barely breaking, selling. This time I actually got a little bit more footing, broke, and then sold off again. But it has all been guided upon the Fed. And what came out today in the report was just nasty. Essentially, we have the Fed, which is something we've seen in the last meeting. We saw this back in December. They were essentially going and saying that, hey, we messed up. We know it's a bad thing. It's not transitory. We're seeing a broadening of inflation. So, being said, with that being a concern, uh, they the notes essentially suggested that they are backpedaling very fast. They went from doing 3 rate raises to possibly 4 rate raises, and accelerating a lot of the subsidies, essentially buying of bonds and everything. The tapering is going to accelerate from this point forward, and essentially March being the first rate raise, which is something I've talked about. I figured that was going to happen in March at some point. I figured at that point we would get a correction, but that report was so bad and opened the eyes of a lot of people, which people have been talking about over and over and over. But the market got it today. They got the whole everything that Powell's essentially said is pretty much been tossed out the window. People were counting on Powell to essentially have their best interest, and now I think it looks like he is backpedaling, and that is what the market does not like. The fact that they are accelerating the tapering, that they are planning to possibly increase it to 4. Really, depending on what's going on. The only good news about the report was possibly that they believe that the new Omicron variant isn't as deadly as they thought, and so yes, that helps with the supply thing, uh, supply constraints and stuff like that. So that does help. So they don't see that possibly being a concern. But again, now it's like now they want to suck money essentially out of the market. They've essentially overcompensated over the past 2 years, which we all knew. They put way too much money in the market. I mean, that's just blatantly obvious. They are just putting that in this report, and is being as the Fed is supposed to be so transparent, and there was a lot of other Fed members that were coming out and speaking many previous months before. Now we're seeing everything in the report, and now you're getting Powell, essentially the head that was guiding everybody, that was essentially telling everybody it was okay, and now it's saying, okay, well, I messed up, so now we have to pay the consequences. And that being a normalization. Now, what does that mean? That means that your tech is going to take a heavy hit. We dealt with normalization and talks about this last March. We are getting this much sooner than expected. I was expecting this move to really happen in March when the actual rate raises came out. But that move today just solidifies everything. Again, we've been really struggling every time we hit all-time highs. We've been selling. It's something I've been talking about. You can go back to my previous videos and what I've been talking about. It's something I did not like. We were look strong. We don't want to sell, and then we get a report. We've been waiting on the Fed because if the report was going to be the same old song and dance we've been seeing, we would have exploded today into price discovery mode. But it changes. The market always changes. This is something I've reiterated multiple times as well. The market changes on a dime, and all the dirty laundry from the Fed essentially was exposed today. And that is why the market is essentially crapping out. We're going to see normalization. This is going to happen. This price adjustment is going to happen now as opposed to March. And so in March, you'll see a diluted version of a correction because I don't know what we're going to get now. Now we're in essentially the state we have to go day to day to see what the market is going to give us. I expect another possible gap down tomorrow is what I'm expecting, seeing some kind of price. I'm expecting some gap down tomorrow and retest and possibly even more selling. But there's going to be a lot of volatility in the market, which normally introduces a lot of big moves. So that's something to keep in mind. I still think that the market could do very well, right? It's just the market overall, in the broad sense, you have to understand that this is still very good for the market. That means the market is doing well. The Fed is trying to play catch up. Yeah, they messed up. We know they were going to do this, but now the market has to correct. Now the market has to normalize. So you're going to see big pullbacks in tech because of this. Again, something, if you can look back in March of last year, we saw big corrections, primarily in tech. And so a lot of your runners were in value. A lot of your runners were in banks, and other value stocks because of that fact. And you're going to see it again. And even being said, you still have a stock like Tesla that is destroying it and making a lot of other tech companies look bad. And so my gauge for tech moving forward will be Tesla and will be Google and Apple. I think are going to be the biggest ones. You're seeing a lot of weakness in Microsoft the past 3 days. Matter of fact, it just continues to sell off. A lot of these inflation will again hurt tech in the short run, but we have to also understand with everything that's going on in the technology that's pushing forward. Because if you even look at Bitcoin took a big hit today, but like I said, as long as it can hold above that 42K mark, we should be fine. We're still bullish for crypto. But again, I think you're going to see a divergence with Bitcoin and other cryptocurrencies like ETH and Cardano, and all those are still going to, I think, kill it because of the NFT space and the popularity that is gaining. Not just because of the art, but what that technology represents and what it can do moving forward. And I think you can't wrap Bitcoin in with that, because it's not, yes, it is cryptocurrency. People know Bitcoin, but the more people are getting educated about crypto, that's going to soon dissipate. And I think you're not going to have Bitcoin just driving all of the currencies, although that in itself is going to take a long time. The transitions are going to take a long time. Do we see recession? The Fed's mentioning recession. So that's something else that could pop this back up. Even looking at gold had a nice pump up. And something I haven't really been messing with since last year, because essentially Bitcoin has taken over that, what essentially gold was that safe haven. And even this safe haven isn't holding either. So I think in the broad sense, the market doesn't know what to think of what the Fed just came out with. I think we do gap down, but I think tech is going to take a major hit, a big hit. So you have to find essentially the value stocks that are going to pull the weight. Possibly this is why Disney's been doing so well. This is why Target and Walmart have been doing so well. HD, all those, they're going to take essentially the driver's seat for a little bit. We do have earnings coming up. I think this is going to do is reset the market for earnings. Then we'll have earnings, and then we'll have perhaps a true correction when we actually see what the rate raises will be in March. Again, something I've talked about. But yeah, again, ultimately you have to understand that these cycles are trying to, the market is still very strong. This is why the Fed is panicking, because the market is strong. They're trying to correct a move that they've essentially overcompensated for, and so that is the heat that we're getting right now. This is normal. Yes, there's still tons of money in the market, and they still don't know what could possibly happen. Um, right now, you're realizing that the inflation and everything is happening, so now you got a bunch of corrective action. There's just a hot mess going on in the market. So you have to understand we're right in the middle of all that mess. We've had essentially a year and a half of solid straight up. We didn't get a correction last year. A proper correction is at least 10%. We didn't see that. We got very diluted corrections. Again, I think we'll have our first true correction on the first rate raise, and then from that point, we'll have smaller possible corrections throughout this year. So I think that this year of volatility, there'll be a lot of volatility in this market this year. You're going to see big swings, I think, in tech. Once tech comes crashing down, it'll pop back up on earnings, and then you'll see value come crashing down when tech starts to pull back. So volatility is definitely just beginning, I think, with the markets. The good thing is, I think, with this is that you're not really going to be able to do longer swings in this foreseeable future. Again, my consensus for 2022 is going to be that there's going to be bigger movements. We've seen a lot of chop towards the back half of 2020 because of wondering what the Fed is going to do. Now we're starting to get more answers. Now they're becoming more transparent. Now they're coming out saying today is essentially sticker shock that, hey, the Fed messed up and this is what's going to happen. But now we're going to start see bigger movement, and that's what we want to see in the market is bigger movement. I don't think we're going to see this chop and consolidation because of uncertainty. I think there will be, but I don't think all the drivers are essentially exposed at this point. We know what's coming up. We have to be wary of these events. This is why fundamentals make a big difference, because you need to determine what is going on in the current state, what events are coming up, especially with the Fed. What is their time frame? If they're going to do 4 this year, how big of a rate raises are they looking at? Did they decide to take some rate raises off the table, which could be something that does happen, and then that could cause tech to take a massive boost. Again, whatever point that is during this year, 4 rate raises is a lot during 1 year. So just be mindful that the planning and timing of those things and the size of those rate increases will play a big factor in where the market is going. And so, again, there is uncertainty, but realize that I don't think there's going to be, we might get chopped going into these Fed meetings to determine what's going on. I think we will get chopped heading into the end of the month. We might get more time frame updates. Maybe we won't. Maybe we'll just get, hey, we already know that it's coming in March. It's going to be the first rate raise. Maybe we might get an idea of perhaps numbers being thrown out there, a little bit better idea of possibly when that second rate raise might come around. The biggest thing here too is that they said that they're not waiting on data anymore at this point. At this point, they realize that they need to start correcting, and this is why there's tapering is being expedited. So being said, that does in the broad sense, it's still very strong. It means we're still in a very strong market. Again, it's just Fed overcompensating. There's a lot of craziness in the market. So again, looking forward, always stay with big names, especially when there's confusion like this. A lot of mid caps, small caps are really going to continue to take a beating until this market stabilizes with all these rate raises and determines what's going on. So FANG is still a big key to what I play. Also, start looking at some good value. I might actually start playing some BA and banks a little bit more. Start looking at some other industries as well. That's one thing to keep in mind when you are in the market, is that stuff will shift and you can't always play the same particular things. Have a solid process. Make sure your process is sound, and you stick to that process. The better you can be more disciplined to sticking to your process, the better things will work out in your favor. So being said, going into tomorrow, it really just depends. A lot of key levels on index. I think index is going to still get destroyed tomorrow. We did break the 20 on the daily. We just straight buttered through everything. I believe we're going to possibly get a retest at this 47.20 tomorrow, 47.21. I think, and that will bring us down to the 50, which is at the 46.60 mark. And then we have weekly support sitting at the 45.81. I can see us pulling back to that mark. Is that going to be enough? The market will determine that. And this is why I do daily updates, because you're not going to know. You have to see where the price action is. You have to see where the buyers are. You have to see where the sellers are. The seller is going to continue to come in hot. Again, we have full volume. So you're seeing full volume moves. We're not dealing with the past 2 weeks where you have retail pushing and driving the market, and understand that there's still a lot more to come. Again, doing this, giving this analysis, you have to realize that stuff is continuously, new information is continuously given every day. And so you have to make the best decision in the given moment and realize that that moment can change. And with policies and everything that's been going on, this unique situation that we have with a pandemic is put a unique spin on the market. You have to understand that, and you have to be very vigilant and take profits while you can, not overextend yourself. Don't put yourself at risk. With the moves that are going on. The volatility, again, is going to be there over the next foreseeable future, unless something dramatically changes, unless they decide to take some of the tapering, stop accelerating the tapering. Again, they're very hawkish the way they approach this. So that is what is freaking the market out, is that they're going to start trying to pull up a lot of the different money that they've thrown out there and try to clean up some of that. And so with that being said, you're going to see some bigger moves here. Again, tomorrow is really going to matter. Do we get a bounce? Do we gap down? Or are we going to stay flat? We stay flat and get a weak bounce, I will be in puts, because I can guarantee you tech is going to drive down the whole market. Nothing is really holding. Banks gave up, value gave up, gold gave up, Bitcoin gave up, everything gave up, because it was sticker shock on what Fed put out there today. I wasn't even expecting that big of a movement from or that big of news coming from the Fed, but them coming with an extra rate raise and accelerated tapering after what was being said. Again, nothing should be surprising in the markets, but that's what we got. That's what we're dealing with. If you have risk management, you knew there was an event coming up. Yes, you could have taken a little bit of a hit today, but you could have been very controlled. You wouldn't have went full throttle and thinking the market was going to continue up. Yes, it was stalling. Yes, we've been talking about the market made all-time highs and been selling for a while now. Is that what we're going to see? And that looks like exactly what we're going to see for the short term. Again, we'll take it day to day. I will always try to provide you the best information that I can, given the current situation that we're in, and realize that that is very dynamic and that changes all the time, especially with what we are dealing with now. A lot of data, a lot of information, a lot of policies are continuously changing in this very uncertain period of time in history, and realize that things will continue to move this way, and we might continue to chop. We might play range. As long as that range is wide enough, I think we should be fine. But again, the volatility isn't going away. I think you're going to get big rotations into tech, out of tech, into value, out of value. I think that is where 2022 is going. So if you have made it this far, I appreciate you. Hit the like button and subscribe if you haven't done so already. And let's go get it.